that doing my analysis and after having a setup, I always used to get confused and always used to have self-doubt on when I should enter, when is it correct to enter, when is the right time to enter, is the market ready yet, or stuff like that. So I always used to doubt myself, and most of the times the setup would go my way and I hadn't even entered yet. Am I too late to enter? And all that stuff. I always used to wonder to myself. So I did this for quite a while until I realized this, until I studied this, right? Until I got to understand the simple candlesticks. And I can tell you this, candlesticks are the simplest way you can enter, right? They are the simplest thing you can do, is the best thing that you can do for yourself. Just enter, whether you're using indicators or stuff like, or anything, or price action or supply and demand, anything. It's just candlesticks are the best indicator for you to enter, for show you when the market is ripe or not. Because using other confluences, you might get late entries, and you may not be sure when to enter. After getting a late entry, you'll still be wondering, is it safe for me to enter now? Because the market would have already moved for quite some while, and you haven't even had you haven't even entered a single trade yet, right? So candlesticks are actually the best indicator, the best way to enter. Why? Because you get early confirmations, you get early entries, right? And even if the market doesn't go your way after seeing a candlestick confirmation, right, just know that it's much better than waiting for other confluences. Why? Because if you enter using a candlestick confirmation, your stop loss is actually smaller compared to when you are using other entry criteria, right? And especially if they are indicators, unless you've got another way of predicting the market, so something like inside trading, right? So in this video, I'm going to be sharing with you exactly how I use candlesticks, how I study candlesticks, how I see candlesticks in order to take my trades, right? So I won't go much into depth about those candlesticks names. I don't even know them at this point. I've completely forgotten about candlesticks and their names. I just know some. Yeah, of course there are others that stick, like the doji, engulfing, and all that stuff, but I don't know all the specific names. Like when I was a student, there was something called the harami, butterfly, or something like that. You don't even need that, right? So in today's video, I'm going to be showing you exactly what you have to look for when you're trading in order to see where the market is going, whether it's right to enter yet or not. Right, so in this video, the strategy that I'm going to be using is the moving averages and the TDI and some simple price action. So I've explained all these concepts in my previous videos. So if you haven't learned all these concepts, then I advise you to watch those after you finish watching this video, right? So that you have the best strategy to enter and the best entry time, right? So you get sniper entries, not sniper, but you get early entries and a perfect strategies that actually work, right? So how do we do this, right? So first of all, what do you have to understand about candlesticks, right? I hope everyone knows what candlesticks are, right? So over here, let's take this, for example, this candle over here, right? So this over here, the thick part over here, that's what we call the candlestick body, right? That's what I'm going to be referring as body in this video, right? So whenever I say body, that's the body I'm talking about, right? And then these small sticks over here, right? These sticks like this, these are the wicks or the shadows. I might interchange, right? So what do we understand? Let's take this, for example, this candle over here, right? So what we understand over here is the market opened here, right, at this point where the body starts, right? And the market went down, right? Or when it opened here, let's just say when it opened here, it went up for some time, right? But it rejected going it didn't go up for a while, right? And it started pulling back down, right? And when it went down, right, over here, it went down up until this point over here where this wick ends, right? And then it put back into the main body, right? So this over here is what we call the open of the candle over here, right? That's when the 15-minute previous 15-minute candle ended, right? The market opened over here, right? And after that opening over here, it went up for a while, right? And then the market refused to continue going up, right? And it came back down, right? After going down, it reached this level over here, right? When the wick ends, right? Where that wick ends, right? And it reversed back into the main body. It refused to continue going down, right? So this is the close of the market, right? Where this body ends over here, that's the close of the market, right? That's where the what, that's where the candlestick closed, the 15-minute candlestick closed, because we are on the what, on the 15-minute time frame on this chart over here, right? Same as this over here. Now we are using a bullish candlestick, right? So this bullish candlestick over here, right? Market opened over here. Now when it's the candlestick is green, the market, the open of the market is what, on the lower what, on the, is we're starting low, we're starting below, right? Over here we started on the top and closed on the bottom, right? So over here we're opening at what, at the bottom and closing on the top, right? So this is where the market opened, right? It went down for a while, but it refused to what, to continue down, right? So it ended where this green wick ends over here, and it reversed back into the what, into the main body, right? Went up a little bit, right? And then put back again, right? And then that's the close. So that's what you have to understand about candlestick, right? So how do you use this to enter, right? So let's just say we've got what, wait, right? So let's say you over here, right? As you can see right over here, I've got this what, this, let me change this a little bit, sorry, okay, let's save so that it's a little bit clearer, right? So over here, as you can see, we've got what, we've got an order block over here. It's an order block, right? And if you want to know more about order blocks, I'm talking about them in the next video, right? Order blocks are in supply and demand, right? I'm going to be posting about that in the next video, right? So this over here is an order block, like, but let's just say support is a support, right? Just for the sake of this video, right? We say a support, right? So we are saying, where did it go, right? So over here, right, this is a support area, right? Why? Because we've got what, break market structure over here, right? Market broke structure, this structure over here, and broke that structure a little bit, right? So this is a valid what, order block, right? So when the market put back over here, what we can see over here, just using the candlesticks, right? So we just want to what, to use the candlesticks, right? So over here the market had a lot of momentum, as you can see, a lot of momentum going down, right? And over here the market went up a little bit, right? Let me zoom in a little bit, right? This over here, the market went up a little bit, right? And then it reversed again, showing that the market still didn't want to continue going what, to continue going up. It still wanted to go down, right? But as you can see, this is when we lost what, most of the momentum. Why? Because this candle over here didn't break the previous candle over here, didn't break the previous candle's low, right? So this is the first signal of a slowdown in momentum, right? So that's what we want to look for first, right? So whenever your entry criteria or your support level or where you want to enter is drawing close, you want to see the market slowing down in momentum, right? You want to see the market reducing its what, reducing its selling pressure if you want to enter for your buys, right? And then this candle over here, this is the one we have been looking for, right? So when the market went down over here, right, as you can see, the market wicked back, right back up, right, because it rejected to continue going down, right? And this isn't, though this isn't enough to enter, right? I think this, we used to call this what, a hammer or a what star, was it a shooting star or whatever we used to call it, right? But this over here, it just shows that the market what, refused to continue going down, right? And it what, rejected and started what, it's now favoring going what, going up, right? So that's what we want to look for, right? So over here you could have entered here, right? But the exact point that's safer to enter will be on this next candle over here, the one that breaks the what, the previous candle's what, high over here, right? So as you can see, the previous candle's high, the previous candle close was over here, and when this green candle breaks that, that's when you take your entries. So it's as simple as that. Just see if what the momentum is doing, right? And then using that same area, let me go back. Where was it? Let me zoom out a little bit. Where is it here? Okay, using that same area again, what we want to see, what we are seeing over here is, right? So let's take this for example over here. We've got a breaking market structure again to the downside, right? I want to keep note of that, right? And this is what, a supply zone, right? So we've got something like an order block over here, right? So selling pressure is also, we are also going to be looking for ourselves in this case, right? And also the further confirmation for that is because our 5200 cross is what, is cross to the downside, right? And we are looking for our sales, right? So that buyer was just showing me an example. Otherwise, using the way I trade, we'll be looking for sales only in this trade, right? I just want to show you that, right? So over here, we pull back to the 50 moving average. As you know, that's our entry criteria, right? And over here, the market had momentum going up, right? And over here, it went up, but what did the market do? It rejected, going up, showing what? A slowdown in momentum, and that's what we are looking for in order for us to enter our sales, right? So you could have entered again right at that point, right, when the market showed a slowdown in momentum, right? Or you could have waited for another further confirmation, right? But this alone is enough a signal to show that we are selling, because we are already in a downtrend. So this is just another entry criteria for you, right? You would have also entered over here, right? Because we've got a bullish engulfing, we've got a bearish engulfing, and over here again we've got another bearish engulfing. So what do I mean by bearish engulfing? So what I mean over here is, let's use a little bit of red over here. Yeah, I think red would do, right? So let me use paper, okay, right? So over here we are saying that this previous green candle over here, both the open and the close have been engulfed by this red candle over here, right? So this shows that the market is engulfed all the momentum that the previous sentiment had, the previous market had, right? So that's showing that the market is dropped its bullish momentum. The sellers are now in control, right? Same as this over here, this green candle, right? Its momentum has been completely engulfed by this candle over here. So you would have entered over here or over here, right? And your stop loss, obviously, since we are using this supply over here, the stop loss is somewhere above that area. So whenever you entered over here, the market didn't hit your stop loss. And this consolidation also on its own is showing a slowdown in momentum. Why? Because the market is refusing to continue going up, right? So it's whenever there's a consolidation, just know that the market is going to have a break in market structure. All these concepts that I'm sharing with you, I've just recently shared more about them in the previous videos, right? So if you want to learn more about that, then go watch them, right? And over here, we're looking for this over here, right? Pull back to the 50 moving average, right? And we've got another engulfing candle over here with a wick to the upside, right? You enter here, and as you can see, we got those spikes, right? So it's just as simple as that. Over here again, we've got another engulfing candle over here, right? So what you just have to look for, what you just have to be careful about, what you have to keep in mind is, where is the momentum going? Where is the most of the momentum? So you just have to understand the wicks, right? The body of the candlesticks, and engulfing candlesticks, just be able to see them, right? And see a slowdown in momentum. That's all that you need. So it needs a lot of practice before you can actually just use price action on its own, right? So keep on practicing that and you'll be good to go, right? So, and also when you're looking at your candlesticks, what I advise is not to use the 1 minute time frame. The 1 minute time frame isn't that accurate, right? So I advise at least starting from the 15-minute time frame, the 1 hour, right? Those are the most that I use. But even the 50-minute going up, 15, 30, 4 hour, yeah, the day I don't even use it. I don't use it that much, but it still works, right? What I don't like is the 1 minute time frame and the 5 minute to some greater extent, because the 5 minute can contradict itself, but the 15-minute going up is okay to use to get your entries using that. So that's it for this video. Remember, between where you currently are and where you want to be, you are the bridge. So do the hard work. Peace.